It will be back. We just earlier talked with Juliana Roadley about the outlook for the iron ore space, given we've got Cyclone Rusty bearing down on the coast in WA. Also a call in the last 24 hours or so from UBS saying the iron ore price could halve by the September quarter this year. We're talking about iron ore back at $70 US a tonne. Could that really happen? Let's get across the latest commodity moves with Pete McGuire from NG Ferrer. Pete, good to see you. Thank you.
Good morning, Ben.
Yeah, what's the potential for iron ore to drop off from here? We've kind of been marvelling that it's managed to stay around these very high levels.
Sure.
Do you agree there's a potential for a big drop-off as much as 50%?
Well, that's certainly bullish to the downside, isn't it? When you think of, bearish, but I mean, it's just a massive correction. And we've got to be mindful that it was there in September of last year, and we saw that heavy sell-off, not quite to 70, but, certainly in the 80s. And then you've seen it hit as high as 154, that nearly 160 range. Where restocking of inventories is standard this time of year after Chinese Lunar New Year. And I think you're going to see a build over the next couple of months. But then you look at, what goes on. Certainly they must be worried about what's happening as Europe and a fragmentation of that whole zone. So you're not seeing the demand. That possibly could be an underlying issue.
And a ramp-up of supply from Chinese producers as well, seems to be as part of that forecast.
Exactly. And then what happens today as far as Rusty, and are we going to see, like we have the hurricane season each year in that Gulf of Mexico, are we going to see a continuation where we're going to see more cyclones in that region over the coming, say, month or two, because 20% of the world's seaborne iron ore is transported from Port Hedland. So that could impact and that could have a bearing on that particular forecast.
What's the kind of the time frame on an impact from something like that, a cyclone? What is, what are the variations?
If you get a precession, remember what happens in the States hurricane season. You get a precession, not unusual to see a precession of hurricanes. Now, the cyclone season in that region of northwest Australia, we may see another one in a couple of weeks' time. Who knows? It's all Mother Nature. But you could see a precession rolling into March and certainly early April. So, dependent upon weather conditions, what impact that can have to the market.
It's interesting. I guess that could keep elevated levels for that iron ore price.
Well, exactly. I mean, when you look at that chart, Brooke, and you see, what's happened really since that Q3 of 12, where it just, massive move up, nearly doubling in price. It's certainly held at those sort of, 145 to 155 level over the previous, month and a half to 2 months. So it's been very, very static at that over the last, say, 6 to 8 weeks. But what happens in the foreseeable future is really anyone's guess. But if UBS come out and say they could see 70, then it's not a good tone for the market players like the BHPs and certainly Fortescue and Rio.
Interesting in the oil markets, NYMEX crude around 92, 93 a barrel. We just saw a minute ago Brent price about 113, just shy of that at the moment. How significant is that difference, that wide gap at the moment?
Yeah, you bet. I mean, it's at now $21, $22, and we have... See, going back about 4 years ago, we didn't have any issues. WTI always traded at a premium to Brent. But since the US shale revolution, there's been a turnaround, and certainly we're seeing, the Brent move far, far higher than what West Texas Intermediate, and now you're rolling that out to a $22 spread or $22 premium. So, will it change in the foreseeable future? I don't necessarily think so. And you're probably always going to see that large price, gap between the two traded energy sources.
What's keeping that Brent price so elevated, though? Aside from, obviously, you talked about the difference because of the shale gas, but what's keeping it still north of 110? Well,
North Sea oil, and it seems to be more now, Brooke, the benchmark as far as global trade. That's the real benchmark that they're trading is, the Brent price. And that's really what a lot of traders, look at as far as, going back 20 years ago. If I was in New York and you were trading on the NYMEX, everything was, WTI. But certainly it's lost some of its horsepower, and it's not the favoured trade, and it's not the favoured, blend.
Yeah, it's funny, overnight, oil down, but gold and copper higher. The gold bulls, they've been a bit quiet lately because it hasn't been going their way. And you're included in the gold bulls, I know, Peter.
Oh, yeah.
You've had a bit of a pickup. But it's slight compared to what people would have been expecting, given so much free money around. And Ben Bernanke even today is still saying that they're going to stick with that program.
Brooke, they're going to stick with it for many, many years ahead. and we keep on
So
saying
why
that
is it
every month or
gold
so.
At 5,000?
It will be one day. Maybe not 5,000 in my lifetime, but I think one day you'll probably see it well above 3,000. The issue at hand is certainly that there's a lot of fractiousness. It's a fractured mindset as far as Europe. And what happens over probably the next 3 to 4 months after the German election is going to be very interesting how that plays as far as French debt, what's happening with German production numbers and all of those key issues. And I think you're going to see the euro probably back at that 125 level. It's had a solid sell-off in the last 7 weeks.
What, this year?
Yeah. Absolutely. I think there's only one-way traffic really for the euro in the short term, and I think there's a lot of nervousness out there as far as Italy and so on. So as the euro comes under more pressure, I think you're going to see a return to gold, 1650 in the short term, and then it'll slowly trend higher.
Completely open-ended question to finish off. What's catching your eye? What's challenging your views, interesting you?
Sugar production numbers coming out of Brazil are off the Richter scale. They're very, very strong, and you've seen sugar come well off. And I think there's possibly more downturn there as far as price, so that could be something nice to short. And the reasoning, of course, is ethanol production numbers, crude oil at these sort of 90 to 110 a barrel. There could be a little bit of movement there, and I'd also naturally keep a close eye on the copper price.
Fantastic. Pete McGuire, thanks very much for joining us on Trading Day.
Cheers, Brooke.
Appreciate it. Still ahead, is an 11th hour deal possible? US just days away from budget cuts that could cripple growth. Mark Todd will join us from FIG Securities to dissect Ben Bernanke's speech overnight.
As a nation, we question, we challenge. It's this spirit that drives us at Holden as we design, engineer and build. Some cars you'll know, some you won't, some you soon will. Like Australia's top-selling large cars and the only small car built in Australia. That's good for the economy, supporting Australian families. At Holden, we're excited about 2013 and what the future holds.
How is your car insurance looking?
It could be cheaper.
Have you tried to build your own policy?
No.
You can select only what you need and adjust your excess and agreed value.
That sounds great.
You can even include bicycle and pet cover.
Wow.
Build your own policy with real insurance and get what you really need at a price you'll really like. Call us on 13 19 48 or go online today.
Introducing the Virgin Australia Velocity Flyer Card. It earns points on your everyday purchases. Better still, buy a Virgin Australia